market wallows in extreme fear as Bitcoin struggles to hold $20,000. Bitcoin has been struggling in recent times and even with the recovery, continues to find it hard to hold above the $20,000 level. With the crash has also come a significant decline in investor sentiment which has reached some of its lowest points in recent years. And even with Bitcoin finally making the coveted recovery above $20,000, it seems investor sentiment is finding it hard to keep up as it remains firmly in the negative. According to the Crypto Fear and Greed Index, a tool that measures how investors are feeling towards the market, investors are still very wary of the market. The index is currently at a score of 11, which means that the market is still in the extreme fear territory. This comes as no surprise given where the price of the leading digital assets in the space has been. Even profitability has plummeted in this time period, leaving a lot of investors holding bags of losses in the market. Additionally, multiple events have also played integral roles in getting investor sentiment to this point. The first had been the lunar crash that had wiped billions of dollars off the market. Then leading lending protocol had frozen withdrawals and transfers, essentially blocking off thousands of investors from being able to access their funds. With crypto being locked on multiple platforms, investors are wary of putting any money in the market for fear of losing it or having it locked on a platform. Hence, inflows into the space have slowed significantly in wait for better sentiment. Where is Bitcoin headed? Bitcoin had fallen as low as $17,600 in its last week's downtrend. This was below the previous cycle peak, triggering fear among investors that there may be no support. However, the digital asset had found support and had since recovered back above $20,000 where it is now resting. Nevertheless, the digital asset continues to struggle. Holding above this level has been a Herculean task, especially with the significant resistance being mounted by bears at the $21,000 point. Moreover, some in the space expect the price of the digital asset to keep declining from this month. BTC recovers above $20,000, source, accused on TradingView. Going along with the halving trend that Bitcoin has followed since its inception, it may be at least another year before the digital asset makes a recovery towards its previous all-time high. Looking at historical data shows that the next bull market may likely start in May 2024, when the next halving occurs. Bitcoin is now trading above its 5-day moving average for the first time since the crash. However, this does not essentially mean a bull trend is underway. Rather, it shows that a certain level of stability is beginning to return to the market. Bitcoin whale presence on derivatives still high, more volatility ahead? On-chain data shows Bitcoin whales are transferring large amounts to derivatives exchanges right now, a signal that more volatility could be ahead for the crypto. Bitcoin all exchanges to derivatives flow continues to show high value. As explained by an analyst in a CryptoQuant post, BTC whale activity on derivatives exchanges still seems to be high. The relevant indicator here is the all exchanges to derivatives exchanges flow, which measures the total amount of Bitcoin moving from spot exchange wallets to derivatives. When the value of this metric spikes up, it means whales are currently moving a large number of coins to derivatives exchanges right now. Such a trend usually occurs around lows in the price of the crypto as whales look to get themselves long positions. Related reading: Bitcoin recovery slows down as whale inflows remain elevated. On the other hand, low values of the indicator show whales aren't moving much coins to derivatives at the moment. This kind of trend has historically led to tops in the value of the coin. Now, here is a chart that shows the trend in the Bitcoin all exchanges to derivatives flow over the last couple of years. Looks like the value of the metric has been quite high recently, source, CryptoQuant. As you can see in the above graph, the Bitcoin spot to derivatives flow has spiked up recently, suggesting that whale activity is pretty high right now. In fact, the current value of the indicator is actually the highest ever in the history of the cryptocurrency, implying there is an all-time high rate of whales on derivatives currently. Historically, the price of the crypto has observed significant volatility whenever the metric's value has been elevated. Based on this trend, the quant believes that the value of the coin could still see further fluctuations in the near future. The analyst also notes that a reduction in the all exchanges to derivatives flow will need to be there, for the volatility to die down. At the time of writing, Bitcoin's price floats around $21,100, up 4% in the last 7 days. Over the past month, the crypto has lost 27% in value. The below chart shows the trend in the price of the coin over the last 5 days. After hitting a low of below $18,000 a week ago, Bitcoin has been trying to recover. So far, the crypto has managed to break above $21,000 again, but it's yet unclear whether this recovery will last. Thanks for watching. Please subscribe our channel and click the bell icon for more news update.